Tax payment and reporting. Beyond filing tax returns, tax payment and reporting in Mexico include ongoing tax calculations, monitoring provisional payments, reconciling accounting and tax records, issuing compliant electronic invoices, withholding and remitting taxes, and maintaining supporting documentation. It also involves responding to tax authority requirements and ensuring consistency across all reported information. Which taxes must companies actively monitor throughout the year? Companies in Mexico must actively monitor income tax, value-added tax, payroll-related taxes and withholdings, Social Security contributions, and local taxes such as payroll tax. These obligations are continuous and require monthly or even daily control, not just year-end review. Why is timing as critical as accuracy in tax payments? In the Mexican tax system, even a correctly calculated tax can generate penalties if it is paid late. Provisional payments, VAT remittances, and withholdings have strict deadlines. Poor timing affects cash flow planning and results in surcharges, fines, and potential restrictions on tax certificates, which are essential for operations. How do errors in tax reporting affect cash flow and operations? Errors can lead to overpayments, frozen refunds, penalties, or audit processes that block cash recovery. Additionally, discrepancies may cause the tax authority to restrict digital tax certificates, limiting the company's ability to invoice customers and directly impacting revenue generation. What happens when tax payments are made incorrectly or late? Incorrect or late payments generate surcharges, fines, and increased audit exposure. Over time, these issues can escalate into tax credits, enforcement procedures, or reputational damage with the tax authority, all which strain cash flow and management resources. Which internal areas influence tax payment accuracy? Tax accuracy depends heavily on areas outside the tax department, such as accounting, accounts payable, accounts receivable, payroll, procurement, and operations. Why do tax issues usually originate outside the tax department? Because taxes are calculated based on operational data. If transactions are incorrectly recorded, invoices are non-compliant, or processes are poorly designed, the tax department can only report what it receives. As a result, most tax risks originate from operational and administrative failures, not from tax interpretation itself. Learn more about tax compliance in Prudenza Academy. Built for strategic execution.